not going to feel sorry for you. It's not going to feel sorry that you didn't put a stop loss in and limit the amount of money that you're going to lose or could have lost. It's going to punish you. That's what it's there for. It's not here for your entertainment. It's not here for you to get better in terms of financial living. It's not for you. This is war. And you have to treat it as such. When people go out to battle, nation against nation, are they walking out there with wife beaters on and shorts and flip flops? Hell no. They're going out there with helmets, plates. They're trying to get behind barriers like tanks and things that fortify themselves from, you know, enemy fire because there's a risk. So if you're out there trying to do things and you don't have control mechanisms and measures in place, when should you do something? When shouldn't you do something? Well, that applies to a stop loss. I'm willing to take a loss if it goes here, but if it goes here and beyond, I'm probably wrong. That's what everybody without a stop loss is avoiding, that notion of being wrong. And being wrong, folks, you got to warm up to the idea that's the best thing to know in this industry. Are you wrong? Are you wrong about your idea or your outlook on the marketplace? Because if you are wrong, you're going to want to know it because you're not going to keep throwing good money after bad. And as a young man at 20 years old, I didn't know that. I learned it painfully and very expensively, but I did learn it. Those and these are the discussions that none of the young hotshots that want to come here teach me an order block. Teach me an order block. Just give me the bias. Those individuals, and you know who you are listening, you're never going to learn how to do this as long as you hold on to those mindsets and think that's all it is. There is so much more that's going to be in your way. And you have not been here long enough, not under me, but in the markets long enough to discern where these things are going to creep up into your development, your trading. And everybody endures it. You're not going to be the guy or gal that just tap dances around these barriers, these pitfalls, these snares. You're going to put your head in the noose just like everybody else does and hang themselves. But I'm telling you, you don't have to do those things to learn the lesson. Learn from my mistakes. Learn from the fact that I lost fortunes doing stupid stuff, stupid things. And it's not shameful for me to admit these things. I would want to learn from someone that's open and honest. This is how I screwed up in the past. And I lost lots of money. And I believe these things that are out there, they're still being promoted by books and authors and things. And it's garbage because they only talk about this is what you can make. This is the pattern that works. And they fixate on those positive outcomes and not nearly enough on the things that are going to hurt you. That's the reality. You're going to lose money. Even trading with what I teach, you're going to lose money. Are you going to keep losing money in the same trading day, in the same environment that you keep losing previous weeks and previous months? Most of you probably won't endure that because your money management is lacking and you'll blow out before that even becomes an issue. Suddenly, some of you are thinking to yourself, wow, this trading thing is a little bit more involved than I thought. Exactly. It's very easy to do, but it's next to impossible to accomplish profitably because you get in your own way. You don't have boundaries. You don't have limitations on what you can and can't do. And you expose yourself to risks, limitless risks. Without a stop loss, you're saying take everything in my account and more. And given that opportunity, it can and will. I have seen that firsthand. I know that intimately. That's a feeling you don't want to ever have. And I can tell you, in those instances where I was a 20-year-old and I knew that was going to be the outcome, I still wouldn't close the trade. Think about it. I'm in an account. That account maybe had $17,000, $18,000 in it, $20,000 in it. And I'm in a position and I'm holding on to it, holding on to it. Live cattle. It's going to move. It's going to move. Yeah, it's moving against me. And it's way beyond what I've been thinking is this is the area I would like to get out that goes down here. But I don't want to be wrong. I don't want to be wrong, man. Come on. I need a winner. And if I can come back from this is like the underdog story. This thing went against me so far, and I still came out. Well, I came out. I came out of that trading day with a blown account. So you have to have limitations. You have to say, regardless of what anybody else thinks about me, regardless of whatever my mentor might suggest, I have to have my own limitations. These are the rules that I have to adhere to. That's it. He teaches 1% risk, but I can't. I got to do 1/4 of 1% because I just can't. I can't tolerate it. I gotta use that little bit of money to do it. That's the right way of doing it. If I or anybody else says this is the minimum threshold that you should reach in terms of managing and, well, managing risk, it's always there. But if you take that 1 degree or more beyond what the educator like myself or anyone else that's teaching sound money management and risk management, and you make it even more limited, that's actually a good thing. And some of you are like, oh, well, you can't get rich. I can't make a lot of money risking 1/4 of 1%. You don't know math. Anybody that says you can't get rich risking 1/4 of 1% failed rudimentary math, period. Because you can do a whole hell of a lot risking 1/4 of 1% if you know what you're doing. But the problem is you failed rudimentary math. That's the first problem. Two, you don't know how to trade. You don't know how to trade because you don't know that these patterns repeat multiple times inside of 1 week. How many weeks are in a month? Generally 4 or more. How many months are in a year? 12. How long do you plan on being on this spinning rock? That's uncertain. But as long as you have mental faculties and health to do so and equity, you probably want to keep trading, right? So all that is potential opportunity. But you right now listening, are probably looking at every single individual transaction, every trade. This is the make it or break it. This is the be all end all. This has to work or I'm done. Why? Why did you just make this a summer blockbuster plot where you have to absolutely conquer the biggest boss of the most villainous organization on the planet? Even the X-Men wouldn't even mess with this person. Okay, that's what you've turned this trade into. It sounds silly when you think about it because that's exactly what you've been doing. You've turned it into an Olympic feat when it's just a simple trade. But you're trading with such a high degree of leverage in an environment where it's not likely to work in your favor, but you just had to push a button. Now you're looking for the theme track to Interstellar. John, I'm going to figure out the problems of the universe and I'm going to beat this trade. I mean, come on, man. You're doing too much. It's either you're buying it, it's going to go higher and you get out, or you're shorting it, you're getting out lower price. If the market's not providing you an atmosphere or environment that provides it in a way where it's symmetrical, all things being equal, risk on, risk off, liquidity's obvious, the market's moving very nice, clean price levels. It means it creates imbalances, it comes back, rebalances, and then starts to expand in the direction you want to see it. Order flow is working in your favor. All those things are firing on all cylinders. That's the environment you want to be trading in. And that's what I teach you how to identify. But I'm also teaching you, and some of you are kicking and screaming, you don't want to learn the lessons when to stay out because guess what? That's being told you can't do something by daddy. A lot of you have daddy issues. You don't want to be told when you can and can't do something. Don't try to trade with a 2 pip stop loss because you see other people saying they can do it. Listen, I can. Doesn't mean I do. Do you hear that? I can, but it doesn't mean I do. Just because you see somebody else do something, that means that they've said they've done something already. It's hindsight. They've done something. That's not an invitation for you to try to replicate that. The circumstances that caused that event, even if they did make money, You can't go back in time and do that with them. And you can't take every instance of when someone else said something, just like with my lessons and my teachings. They're going to be fractal. They look similar, but they're not exactly identical. And some of you, like my uncle was, he's very finite. It has to be black or white. It has to be this or that. And it can't be close to it, but still worth taking a shot and using a stop loss and see what happens. If you're too analytical, too things have to be in the fine print exactly this way each time, you are going to struggle. And there's no shorter way of saying it and more direct. You are going to struggle. The market's not going to bend to make it easier for you. You're going to have to endure and learn that you have to trade in the gray, where it looks like something you've seen before. But because it could be wrong, and you as the operator, you as the trader following the analyst, you have to incur that risk. And you have to keep at bay the gambler that says, come on, man, don't listen to this guy, man. Look, you see the chart. You've done 14 other trades where he wasn't even looking at that pair, and you made money. Don't listen to ICT about everything. Trust your gut. Well, this is one instance where you don't trust your gut, and you should be listening to me. I'm talking to the analyst in you, not the trader. This is the brain trust inside of you. This is the person that you're going to place all your trust in, not me, not your friends in some chat room. You, the person that's really going to push that button to get in and get out. The person that's really going to put the stop loss on and not pretend that I know where I want to get out. There's a lot of trades I wish I would have got out where I wanted to get out, and it didn't give me the opportunity to do it. It just rolled right over top of it and kept on running. You have to have, well, flexibility in yourself, your expectations, and your own performance. But that is also going to have to incorporate hard rules. I cannot take a trade when circumstances are like this. What is that? The day after a bank holiday, a day after a long weekend. Those things are, man, they're snares. There's going to be some days where they just really rip and tear off, and it's wonderful to be a part of those moves. But they're not always like that. They're more likely to not be like that. So is that high probability conditions? No, at least not by my definition, isn't. And I know some of you in here don't like to define things as high probability based on the things I say are high probability, because you've done something, and you maybe done something and you made profits with a real account, because you shouldn't be trading with real money yet. You're still learning, but some of you just want to be doing it. Now, be honest. No one else can hear your thoughts. When you know you shouldn't be doing something and you made money, do you really feel good about it? No. That's the reason why you go on social media and talk about how you made money. You're dealing with the guilt because you knew that that was not skill. That was plain old luck. I believe in luck. I don't believe my results are a result of luck. I believe when I make money and I know I shouldn't have done what I did, that is luck. I know it exists. My ass has been saved many times of, well, doing the wrong thing at the wrong time, but eking my way out of it with a profit. And I believe that that goes on a lot in this industry. And you see it thrown up, regurgitated day after day with these people posting their MT4 results. And they're the same individual that have 20 trades in the same asset, and they're all different prices by maybe 1.5 pips difference. $18,000, $20,000 profits on each one of them. They did not take that trade. And the fact that they have all those little entry points, they didn't know what they're doing. They're just going in, placing trades, and then there it is. I'm telling you, folks, those individuals are not making real money. Period. But these are the same people that are going to influence you and tell you, don't use a stop loss. Trade on days where I'm teaching you it's not likely to be that perfect setup that you're looking for. Did you just say perfect? Yes, I did. There's a perfect setup that I have in mind that I hunt every single week. Sometimes I miss it. Sometimes it doesn't form. But in my mind, I have a specific unicorn pattern that I like to see every single week. And I go after that. That's my personal model. I'm not teaching you. It has a lot of the things that I've shared, but your unique unicorn pattern, that little perfect thing that you're looking for, you'll develop that on your own. It might be the very model I gave on YouTube. Or if you're a private membership student, it may be one of the models I taught. Or it might be a hybrid of 12 that I taught. That's where the flexibility has to come in. You have to give yourself the flexibility and invitation to bring your own individual uniqueness as a person into your trading. It's fine to take what I've taught conceptually, but you have to still work with that like clay and mold it around your personality. If it doesn't work, it's not because my concepts don't work. It's not because you can't be a profitable trader. It's just because you have not form fitted it to your personal personality, your way of thinking and engaging. But these types of ideas where I'm teaching that you cannot do something on certain times of the calendar week or month, they have to be hard rules, regardless of what you've done in the past, regardless of who you respect in this industry, and they tell you differently. I'm telling you, folks, if you want longevity, this is one of those keys, those secrets to doing it. You have to know when to say no. I don't care how good it looks. You're watching the chart. It's no. Because I can tell you, every time I broke this rule, every single time before I put the trade on, I could justify, oh, it looks good. And as soon as I put the trade on, most of the times I regretted it. But I would stay with it because, well, I committed myself. So I can tell you, statistically, looking back, all the times that were harmful to me, the things that were not positive or profitable, all generally hinge on doing things when the market's really not likely to even give me the setup I'm even looking for. And when I was younger, if I had a setup I was looking for, many times I was impatient. I said, well, what the hell with it? You know, I'm getting tired of waiting. This stochastic didn't get down to oversold quite yet. And I'm just going to get in now because I'm just impatient. I'm tired of waiting. Stupid. And you probably done things like this before. Everybody that's ever traded with live money has done that before. And many of you probably still do it. You know what you're looking for: a fair value gap after a shift in market structure and a liquidity pool. There are three things that are very, very clear things that you need to see in the chart. If you can't see them, obviously, what are you doing? Gambling. If you feel the impulse to gamble, that is the sure sign for you to get the hell out of there, turn the computer off, and go and leave your house, leave your office, leave your phone, and go do something else. Physically remove yourself from the opportunity to hurt yourself. Do it. I promise you, if you do that over the course of 1 year, look at how much money you would have saved yourself. That's how you convince yourself of it. But some of you are so new at this, you're not going to believe what I just said applies to you. You're the exception to the rule, and you're not. Believe me, I didn't think my shit stank when I was 20 years old. I thought I figured it out real quick, real fast, and it was like, oh, the golden child. And I had no idea what I was doing. And nobody could have told me these lessons right now, and I never would have listened. And I know that going into this discussion with you, there are some of you, especially young men, you're not going to receive this message, and you're just putting your fingers in your ears. You're waiting for me to talk about something else. There is nothing else I'm talking about today. This is it. But you need this lesson. You need to know it, because if you don't, and if you don't learn it early on, you won't be in this game long. It won't matter, because you will remove yourself, and you've done it to yourself. It won't be me. It won't be my fault. It won't be my concepts. It won't be somebody else influencing you. It's you. You. Your broker takes orders from you. Everybody else around you may have an influence on you, but still, bottom line, and responsibility solely rests on you. You can't blame anyone else. You. That's another reason why this industry is difficult. It's so easy but it's next to impossible because everybody wants to have the credit when it works out in their favor. They want to add a boy, add a girl. They want to champion themselves. They want to pony themselves in front of everybody. Look at this. Look what I did. Look how great I am. Put a thumbs up, like my comment, my post, retweet me. I've done something excellent today. Take notice of me. Look what I've done today. I have done something that is noteworthy. Is that someone that's grounded in what they're doing and they don't need someone else to validate them? No. That's a weak-minded person. That's someone that's an attention whore. That's what that is.